The chart of accounts is the most important part of QuickBooks. Basically, it's a listing of everywhere that the money could flow in your QuickBooks file. For example, anytime you spend money, what did you spend that money for? Was it for meals? Was it for gas for the car? If you received money, was it income for the business? Those are what we call different items on the chart of accounts, and we're going to spend a good bit of time on this because, like I said, this is the most important part. If your items are not set up correctly on this list, your reports will not be accurate and you won't know why. There are two parts to this. Make sure you watch both part 1 and 2 before you move on to the next section. Like I mentioned, the chart of accounts is the most important part of QuickBooks. Therefore, you will want to know how to get to it whenever you need to. It's right here on your home screen and it says Chart of Accounts. Every single thing in QuickBooks will flow back through one of these choices. When you look at this list, you'll notice there are different types of items on this list, and currently they're set up alphabetical per type. For example, when you look at the expense accounts, you'll see over here they're alphabetical. We did talk about in section 1 working with the preferences, and I told you there was a preference where if you wanted to turn on the general ledger numbers, you could do that. There's going to be quite a few items you want to add to this list, and what I want to do with you is go through all the different types over here, and then we'll talk about the ones you need to add. You'll get most of them added pretty much the first time you sit down, but you will find others that you'll need to add as you go along. Let's go ahead and start with the first type, which are bank accounts. And you'll notice there are no bank accounts over here. We're going to have to actually set these up. Now, the easiest way to add an account is to right-click and choose the new option from this list. I want to also just point out that on the very bottom left of your screen, you'll see an option that says Account. And by clicking the arrow next to Account, there's the same options right there you would get by right-clicking. New will obviously set up a new account for you. Here's where you would edit an existing one or delete one. One of the things you need to know about any list in QuickBooks, if you've ever used an item from that list even one time, you're not able to delete it. That's because those numbers would actually pull into reports. Think about if you had a bank account that you used for a while and then you close that bank account. You might not need the name to show up on the list anymore. You can hide it by making it inactive, but you can't delete it because those numbers actually are required for reporting purposes. Let's go ahead and create a checking account. I'm going to go ahead and click New. And the first thing it asks is, what type of account is this? Now, we're going to be going through all of these. Right now, we're talking about bank accounts. You'll notice when you choose an option on the left, it gives you some examples of what a bank account would be over here on the right. A bank account would obviously be checking, savings, money market, petty cash like you see here, but let me add some to the list. If you're using PayPal, Square, Venmo, any of those other types of payment options, you would want to add each of those as a bank account. That's all they are, is they're bank accounts. Even Bitcoin. The other thing that you'll want to add is if you have any cash expenditures that flow through your business, you'll want to have an account to put those in, and the only way you can do that is to create a bank account for those. Just a little FYI, if you do that, then your bank account will always show a negative for that particular account, and that's okay. It's showing the expenses that ran through the company that were actually paid for with cash. Right now, we're going to set up our checking account. If you picked the wrong type on the previous screen, they give you a second chance to go in and change that type. When you name your account, you can name it anything you want. If you want to call it checking, you can do that. If you want to call it payroll, another one called operating, you might call one First Federal, another one Heritage Trust. It really doesn't matter what you call them as long as you know what they represent. And you will want a separate bank account for every real life bank account that you have. This is not a sub-account of another. We'll talk about sub-accounts a little bit later. Here's some things that are optional, a description. If you wanted to put in here that this was the operating account, you could certainly do that so that if someone was on this screen, they would know what checking represented. You do not need your bank account number or your routing number. These are more informational for you. I would not put any of this in here. You really don't need it. You would, however, need an opening balance. I'm going to click on Enter Opening Balance, and then it's going to ask me to put in the statement ending balance and the statement ending date. You have to decide when you want to start your company file. If you've decided you want to start at the beginning of your fiscal year, and let's just say that's January, you'll want to get out January's bank statement and put in whatever its opening balance is. Remember that December's ending and January's beginning are the same number. If you decided you're going to start with the current month, just remember that your reports are only as accurate as all the data you put in, but you could start with your current month. Just make sure you know the opening balance for that particular month. Now, if you're setting this up and you really don't know the balance right now, you can always plug in 0 and go back and change it later. I'm going to go ahead and plug in $5,000. And when you type money in QuickBooks, don't type the $sign, don't type the commas. It will stick all that in for you. And I'm going to go ahead and put in a statement ending. And I'm going to say that I'm starting at the beginning of the year, so I'll just go back and pick January 1. Or remember, I told you that December 31 is the exact same number. And I'm going to click OK. And now you'll see it shows me my opening balance as of, in this case, 12/31 of 2018. Down here, if you still write a lot of checks, then you might want QuickBooks to pop up and remind you when you get to a certain check number to order some more checks. You can plug that in. And just a little FYI, if you're still writing checks, you do not need to buy checks from Intuit. You can buy them anywhere you want. They do try to sell them to you, and that's what this option is here for. You're going to notice in QuickBooks a lot of screens will say Save and Close and Save and New. Save and Close means close what I've got here and save it, and I'll be on the screen that was underneath this. The Save and New option means save this and keep me on the same screen because I have another bank account I'd like to enter. I'm going to go ahead and hit Save and Close just to show you what we've done. And because I dated this more than 90 days in the past, it's basically warning me about that. And if this is a pain, then you can go ahead into the preferences like you see here and turn that option off. I'm going to go ahead and say yes, that I'd like to go ahead and save it. And it will ask you from time to time if you'd like to set up your bank feeds. We're going to say no. Basically what that's asking is, do you want to download from the bank automatically? We're going to talk about that in a later module. For now, I'm just going to say no. I want you to notice now there is a new bank account at the very top of the list. Bank accounts typically show up at the very top. And you can see that it has a balance of $5,000. And something just to notice, you don't really have to know this, but in accounting there's always a debit for something and a credit on the other side of the transaction. And this is what you're seeing here, that there is one side is the checking account and the other side of that entry is called opening balance equity. Let's go ahead and set up another. I'm going to set up a savings account and I'm going to say that we have $20,000. I'll just right click and choose the new option. I'm going to say this is a bank account. I'm going to click Continue. I'm going to name this Savings. Remember, you can name it anything you want. And all I'm going to do is put in the opening balance of $20,000. I'm going to date it for 12/31 of 2018 and click OK. And I'm just going to save and close. I'm going to go ahead and tell it yes, it's okay, because I know that's over 90 days old and I don't want to download from the bank right now. And here you'll see my checking account for $5,000 and my savings has a balance of $20,000 and opening balance equity has $25,000. Let's go ahead and talk about some of these other accounts that you'll want to set up, and I want to just mention the assets just for a moment. An asset is something that makes your business more valuable. If you have chairs, desks, maybe the business owns some vehicles, equipment, those are all assets to the business, and you will want to set up these asset accounts to track those. A couple of terms that you'll want to get used to. When we talk about assets, you have some assets that are fixed. We call those fixed assets. And you'll also have some that are more liquid. Think about if you're a business where you have inventory in the back room. You are worth more because of that inventory, but your goal is to sell it and get it out the door. QuickBooks calls those other current assets. When you set these up, you want to have big buckets. And what I mean by that is you don't want to have one for every single asset that you own because the list would be way too long. You want to have one called vehicles, for example, another one called equipment. Anytime you have a lot of assets you could group together, create an account or a big bucket as I call it, and then you can put those assets in there. This is the one place where your accountant will be most helpful to you because you're not going to know what numbers to plug in here. You're going to get with the accountant. He or she will help you figure out the value of your vehicles, the value of your assets at a particular time. Also, if there's any depreciation or appreciation, the accountant will help you figure that out as well. And just a little FYI, QuickBooks does not do depreciation, and that's because there's so many different ways to do it. That's where your accountant, again, will come in helpful and help you plug in those numbers. You do want to set the accounts up because if you go to get a loan for the bank, for example, they're going to want to know, does the company have any assets? And you want to be able to show those to the bank. And there's other reasons as well for setting up your assets, but just know that this is the one place where the accountant would be most helpful. I want to go ahead and stop the video right here and go ahead and have you go over to part 2 so that we can continue talking about setting up your chart of accounts. We have a lot more to talk about as far as the chart of accounts is concerned. This is part 2. Make sure you've watched part 1 before you watch part 2, but let's go ahead and continue going through our chart of accounts. The next type that I want to talk to you about are your liabilities. A liability is something you owe. Some things you owe are considered short-term. For example, if you collect payroll taxes or you collect sales tax, those are short-term because you have to turn around and send those to the state or whatever entity the money belongs to. We call those short-term liabilities. Something you're going to pay off in 12, 13 months. A long-term liability would be more like a car loan, for example, because you might have a 5-year car note. When you set up your liabilities, you're going to tell QuickBooks if it's short-term or long-term, and the terminology they use for short-term is other current, like you see here. Notice they set up the payroll and the sales tax liabilities automatically, and that's because in the Easy Step interview, you told it that you turned on the payroll and that you actually do sales tax. Any others you would have to add. Let's go ahead and set up a car payment real quick so I can show you how to set up a liability that's more long-term. I'm just going to right-click and choose the New option. One of the things that might be a little confusing is this. When you set up a short-term liability, you're going to choose the Loan option right here. However, if it's a long-term liability, meaning it's over 12 months, 13 months, go ahead and use the option from this drop-down and it will say long-term liability. I'm going to go ahead and hit Continue. I can name the account anything I want. Sometimes people will put the actual bank and they'll put the last couple digits of the account number. Sometimes they'll put the name of the vehicle. I'm going to say car payment. And then you'll notice down here there's a place for your opening balance. What you'll want to put here is as of the start date of your company file, not today, what was the balance you owed on the loan? Not when you took out the loan, but as of the actual start date. Let's say I owed $12,000, and let's say again that that was on 12/31 of 2018. And I'll just click OK, and I'll go ahead and save and close so you can see what it looks like. You'll now see that you have a car payment. It is a long-term liability, and I owe $12,000. Now, something to notice, the opening balance equity went down, because anytime you owe something, that's a minus, whereas the bank account was a plus. So if you ever see a negative number, then don't worry about it. That's an accurate picture of your books. Did you notice that it didn't ask me anywhere what is the interest rate, the term in months, any of that? And that's because when you put in the loan, you're just setting up the account itself. You're not setting up any of the terms of the loan. We're actually going to be talking more about that in Module 8. Specifically in Section 3, we'll be talking about setting up what we call the loan through the Loan Manager in QuickBooks. The other thing I want to mention at this point is when you make a car payment, always put the principal amount to this loan because you want to see this go down. This is an accurate picture of what the loan balance should be. Do not set up your car payment as an expense to the business. It is not an expense, it is a liability. Any other loans you have, you would set up the same way. It could be that you took out a loan to start the business from the bank. It could be that you borrowed money from your personal to start the business. If you expect to pay yourself back, then go ahead and set up a loan for that. The next thing I want to talk about that you do not see here are credit card accounts. If you have credit cards that your business uses to buy items for the business, you want to set up these credit card accounts. All I'm going to do is right click and choose New. You'll notice one of your choices is Credit Card, and then I'm going to click OK. Again, you can name your credit card anything you want. If you want to call it Capital One, if you want to call it Visa, Amex, it really doesn't matter. You just put in your credit card account, and you do want to have an opening balance again. Remember, the opening balance is going to be from the start date of your company file. Get out that statement, and whatever the opening balance is, go ahead and plug that in. Again, remember, the previous month's ending and that month's beginning are the same exact number. I'm going to go ahead and say it was $3,500, and I'm going to put in my date of 12/31 of 2018 here and click OK. I'm going to go ahead and save and close, and you'll see now that when you see the credit card, the balance that you see over on the right is going to be the actual balance on the credit card. When you make a payment towards this Amex card, you want to make sure you put it to this account. Do not start breaking it out by how much is gas and how much is going to be food, that sort of thing, because we're going to do that in a different place in QuickBooks. This is just where the payments go right here. The next thing I want to talk about are your equity accounts, and you'll see there are a couple of them right here. If you think about equity, the word equity means equal. If you take money from the business and move it to personal, or you take personal money and move it to the business, those are both equal. You didn't make money or lose money. That's called owner equity. Let me give you an example of how I often see owner equity set up. Sometimes you'll see the terminology shareholder equity. That's money you put into the business. Or sometimes you'll see shareholder distributions. That's money you took out of the business. Another way that I'll see it set up is owner, and then I'll have sub-accounts underneath for contributions and distributions. Again, that's just a way of an owner showing that they took money out of the business or putting money into the business. And you can set it up however you'd like to. I'm going to right click and choose New, and I'll just set it up this way because I see this often. What I'm going to see here is the word owner as an equity account. And then I'll go ahead and say Save and New, and I'm going to say Contributions. This is when you put money into the business, and this will be a sub-account of owner. And I'll do one more. I'll say Distributions. This is when you take money out of the business. This again will be a sub-account of owner. And now I'll go ahead and save and close so you can see what this looks like. And this is what sub-accounts look like underneath. But you can see that they're all considered equity. So if you put money into the business, it's considered an owner contribution. If you take money out, it's an owner distribution. Sometimes that is called a draw, an owner draw. The next type I want to mention to you are income accounts. You'll see there are a couple of them here. Income is when you actually make a sale for your business and money comes in. That's considered income. You can have one and just use it for everything, or you can break it out into multiple income accounts if you would like. The next section is the cost of goods sold. Anytime that you have to buy a product or a service to make a product or service selling your business, that's called a cost of goods sold. Often you'll see subcontractor expenses under here, job materials, things like that. And you'll notice that on a profit and loss, they will be actually subtracted from your income at the top. The largest grouping that we're going to talk about here are your expense accounts. And this is when you spend money. What did you spend the money for? You can see there's advertising, there's automobile, we've got bank service charges. You can kind of see the list going down here. Let's talk for a moment about sub-accounts, using them with expense accounts. Automobile is a good example because if I want to know how much I spent this year on gas, I really can't tell if I lump it all under automobile expenses, so you might want to consider making a sub-account underneath. I would just right-click and choose New. The sub-account has to be the same type as the main account, so it's an expense, and then I'll just hit Continue. And I'm going to call this one Fuel, and it will be a sub-account of Automobile. And this is how it will look. See how it's underneath it and it's indented a little bit? Some others you might want to consider having sub-accounts underneath. Insurance, you might have different types of insurance like liability, workman's comp, things like that. You can add multiple ones underneath there. You'll notice that you have professional fees. Typically as sub-accounts under there, I will see one for the attorney and one for the accountant. You'll notice there are utilities down here. You'll want to add sub-accounts below that. You'll want to add your water, electric, telephone, things like that. And notice also there's one called Ask My Accountant at the very bottom. If you just don't know where to stick something, stick it in this account called Ask My Accountant, and later you can go back and move it. This gives you a quick overview of how the chart of accounts is set up. Like I said, a lot of this you will get set up when you first sit down and start working on it, but you might find some 6 months later that you need to add. You can always go back and do that or make some of these sub-accounts of others, that sort of thing. We're going to be referring back to the chart of accounts often as we go through the rest of the videos, but for now, let's go ahead and wrap up part 2 of the chart of accounts. Why don't we go ahead and head over now to section 4, and I'll talk to you just for a few minutes about some of the QuickBooks sample files that you might want to look at when you're setting up your chart of accounts to make sure that you do yours the correct way.
If you're not a subscriber, click down below to subscribe so you get notified about similar videos we upload. Now, to get a free QuickBooks Pro 2020 introductory course, click over there. And click over there to watch all the videos in this QuickBooks Pro 2020 playlist.